Mr. Malkani, CFO at Anupam Rasayan, is now with us. We're in the midst of earnings season and a lot of companies are declaring numbers. One such is Anupam Rasayan. If you could just start by the growth that you've seen in the quarter and more importantly, what's happening on the raw material side. You think raw material cost is hurting India, especially on the manufacturing side across the board?
Yeah, good afternoon, Pankaj. And first of all, thank you for having me in your show. Now, for quarter three, we have reported a consolidated total income of 271 crores and registering a YoY growth of 43%. And our consolidated EBITDA, including other income, grew by 36%. It went from 59 crores in Q3 to 80 crores in Q3 22. And our profit after tax stood at 38 crores in Q3 22 compared to 21.6 crores in Q3 21. And the profit after tax increased to 14% compared to 8.5% in the Q3 22. Now coming on to the 9-month performance, the 9-month FY22, then we reported a total operating income of 749 crores against the 539 crores in 9-month FY21. So registering a YY growth of 39%. And our EBITDA, including other income, stood at 215 crores in 9 months FY22 compared to 155 crores in 9 months FY21. And our EBITDA margin increased to 28.20% in 9 months FY22 compared to 27.5% in 9 months FY21. And our profit after tax stood at 106 crores in 9 months FY22 compared to 48.20 crores in 9 months FY21. So registering a growth of 120% in a PAT margin. And most important thing is that our interest cost has reduced by 32.5 crores in 9 months FY22 compared to 9 months FY21. Now coming on to your second question, what happens regarding the increase in price? Yes, there is a definitely increase in key raw material price because the increase in the crude oil price as well as the supply chain disruption in China post-COVID as well as the anticipation of third wave of pandemic as well as increase in logistic and shipping cost. But we have overcome this situation and we are mitigating these factors by keeping a sufficient inventory because we keep 8 to 9 months inventory at any given point of time to mitigate this price volatility risk in the raw material price.
Hi Afzal, good afternoon. This is Anisha this side. When you talked about supply chain disruptions and the changes that we are seeing in the global supply chain, just wanted to get an understanding, is there any import dependency as far as the Russian-Ukraine region is concerned? And do you envisage any kind of impact on your business, whether in terms of exports or imports?
Definitely, earlier in 2018, 2019, our import dependence was 35 to 40%. But now, particularly in Q3 FY22, our import dependence is reduced to 19% in Q3 FY22. And particularly, if we talk about the import dependence on China, then our import dependence on China is only 9%. So we are not dependent on China or any import for our procurement. And our 80% procurement is from the domestic market only.
You know, the point that you made about market share, you think that is the real story, the market share gain that's happening in the last few years? You think it will continue, maybe at a slower pace, but market share gains for Indian companies in chemical space will continue?
Yes, the outlook for the chemicals, including the specialty chemicals, remains positive, and we expect that the specialty chemical market will grow to double digit. And India holds only around 2% of the global market share. So this is there is a huge opportunity to grow from here on for the Indian specialty chemicals due to the global customers China plus one policy.
And Mr. Afzal, if I remember it correctly, you have signed a new LOI this quarter as well, and there has been a lot of order inflows. Going forward, do you expect that you'll have to do some capex, and what's the current capacity utilization level?
Earlier we have signed the total with this LOI of $100 million, which is equal to 700 crores. We have executed this LOI for one of the top 10 multinational companies. And this tenure for this LOI is for 5 years, and per year revenue will be 140 crores per annum. And this will allow us to climb up the value chain and increase our wallet share from our customers. And yes, definitely we will need some capex to execute this LOI, and the total capex requirement for this is 70 crore rupees because we don't need a capex to perform all these steps involved in this product, but we need to do a capex to perform only few steps involved in this product also. So this comparatively the capex will be on a lower side, and we will get better asset utilization